This is a big week for earnings. Over 100 S&P 500 companies are going to report this week. We're going to hear a lot about what's going on with the tariffs, what's happening in their business, what's happening maybe with guidance. We don't know. That's all on the table this week. But I wanted to focus on the top 5 tech stocks you should be watching this week because these are key names. We're starting to get the Mag 7s. We're going to get Tesla and Alphabet this week. So I'm going to talk about both of those. But there's some other big names that you should also be watching in the tech land. And then I'm also putting out a second video this week on the most important charts you should be watching. These 5 are not even the most important ones, but these are the ones that everyone will be tuning into because of the Mag 7 and Tesla and Alphabet, obviously. So let's dive right into this video on the 5 tech stocks you should be watching this week. These are important ones. Okay, let's lead it off with Tesla. Let's just go right into it. Tesla is a car company. So why is it in the video about the tech stocks? Everyone assumes that the real issue here is with its technology. It's supposed to roll out the robo-taxis in Austin in just about 2 months' time. So a lot is going on with Tesla right now. And you can see on this price consensus and EPS surprise chart, I wanted to bring it all to you today because it's not just about the earnings miss or beat. You can see they don't have a good track record here of beating. They have a bunch of misses in a row here in 23, 24. And then they even started off 25 with another miss. Just 2.67% right there. But the estimates are all over the place and analysts have been cutting. You can see this sharp decline here in 2025. Here's 2026 estimates being cut even in just the last week heading into this. So can the analysts even get anything right on this? I don't think so. I'm anticipating another miss. The street has never cared that much about the misses or the beats with Tesla, but it's going to be in whatever else they say is going on with the business. We know that auto sales are down and down sharply, but what else, again, is going on with Tesla, with new models, with the Cybertruck? There's just a lot happening. So I'm going to be watching it. Everyone else is too. Tesla, TSLA. Let's see. We're going to see what happens. Okay, then we're going to switch over to one of the stocks I've covered many times on this video because it's had such a good track record. ServiceNow, ticker NOW. This is also price consensus and earnings surprise. It hasn't missed in 5 years. Still got the great track record. Last quarter, barely beat, but a beat is a beat, 2.5%. But again, I wanted to show you the price to consensus to show you what is happening with those earnings estimates. Not much, it turns out. Analysts holding firm pretty much here in 2025 with both this year and next year. Nice earnings growth expected, but the shares not so much, pulling back pretty considerably, down 27% year to date right now. They are cheaper, that's for sure, but I'm kind of watching this low over here for 2024 as a possible, key resistance level. But this is another one, great earnings surprise, but what are they going to say about the guidance? We will find out. Then we're going to switch over to the chip side, Lam Research. This area used to be steady Eddie, but is being rocked considerably now. And look at this chart. So great earnings surprise track record. One miss back here in 2022. That's what this is, barely 1% miss. Then just sneaking off the chart right here back in 2020, right when the pandemic hit. These are starting to move away now that we're in April of 2025. But just a 1% miss back then. That is impressive given everything that was going on in 2020, as we know, and we want to forget, right? But turning back here to 2025. So year to date, the shares are down 12%. But you can see this one is trying to test the 2023 lows and then did bounce off. But look at this earnings, picture 2025. They look pretty bullish. They were raising into this year for 2025. So that was looking good. But 2026 looking pretty bearish, coming way down there. And so we will see what happens here. Lam Research trading at just 17 times now after this sell-off, well off its 2024 highs now. But, this is definitely one that's going to be on the radar for the guidance. That's what we're going to be watching here with Lam. So Lam Research, LRCX. Then we're bringing up Google, or now as known as Alphabet. I own it in my own personal portfolio, and I have for numerous years now. But you can see they have turned it around on the earnings miss and beats. So 2022, when all the growth stocks got hit, it was, miss. Then they've turned it around, got their act more together, and it has been beating. One of my favorite things about Alphabet is YouTube, and it's seeing record revenue, at least over here, to start the year. But are the advertisers pulling back? That's usually the first thing to go ahead of a recession. People can cut back, and the area they do cut back on is advertising, because you don't have to have it. It's not essential to the business. So are they willing to pay less for those ads on YouTube, or even just cutting the budget and, advertising far less in general on YouTube and other social media networks? But with Alphabet, we care about YouTube. We will see, obviously, they have their own big search business and advertising on that. What is happening there, we'll see. But you can see the analysts getting a little bit bearish here. We start to see a little bit of downturn. They are cutting the estimates even in the last week here for 2025 and 2026. Shares are down 20% year to date. Seems like a common theme with all of these stocks. Trading now at 17.4 times forward earnings. But the street just really doesn't believe that those forward earnings are going to hold. So it might not be as cheap as it seems, might be on the value trap side. I've never really seen it that I can recall going all the way down to, say, 16 or even 15 times earnings. We'll see if it gets there in this cycle, but that would be a big retrenchment even for Alphabet, which has been among the cheapest of the Mag 7 stocks over the years. So we'll be watching this one. That's Alphabet, GOOGL. Then we're going to wrap it up with the one that is hated among investors, the one that has gone nowhere for years and years, Intel, INTC. You can see it says X number 4, so we do have the sell on it. And this is a totally different outlook. As you can see, even on the earnings surprises of two big misses in 2024, they did get a beat last quarter, 8.3%, but the shares still trading near those 5-year lows. It's not that cheap here, believe it or not. It used to be a value stock among the semis, but it's trading at 40 times because look what's happening to the earnings. Down, down, down. And even here for 2025 and 2026, we are kind of seeing a flat line here the last couple of weeks. So nobody else has really cut in this last couple of weeks, but it's not looking good even on this earnings side of the chart. And so Intel, most investors staying away because it does have that value trappiness. And on a PE basis, it's not that cheap. So these are just 5 of the stocks that are going to be reporting this week. These are on the tech side, including obviously these 2 Mag 7 stocks. These are the ones to watch, but there are 5 others that I consider to be even more important. And 2 of those are trading in the green for 2025. What are they? Be sure to watch the other earnings all-stars video for this week because I'm bringing those to you, and get them all on YouTube. Go to Zacks.com/YouTube, subscribe there to get all the earnings charts, get our top stock picks of the week. We're doing that every week. And you can get the podcast too. You can get the Market Edge podcast there in video format. But be sure to get us somewhere and get all these charts on all of our social media accounts and obviously again on YouTube. So I'll see you on the other side with the other video for this week, and I'll be bringing you more charts.